Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, let's again look at the precious metals sector, but first start talking about GDX and GDXJ. Even after a little bit of a bounce, it's coming on low volume, and quite frankly, I think those overall GDX and GDXJ charts do look generally weak. Can I get a first general update from you on these charts, the ones that hold some of the mining stocks?
Sure, Corey. And first thing I'd say is I prefer to follow the miners more so than the metals. So I'm less concerned about where gold and silver are trading, although it's important to watch how silver is trading relative to gold because silver can be a leader. And the same thing for the miners. So that's why I'm less, because people ask me, well, what's your target for gold? What will happen when gold hits this level? I watch the miners first and to a lesser degree silver because they tend to be leading indicators. And when you're getting a sector sell off like we've been getting, they're going to discount a lower gold price in advance as they've been doing in recent weeks. Now, I put out a flash update to my subscribers last night pointing out that GDX and GDXJ are at support points. So there's a good chance they could rally for, a couple days or only a day. And GDX is rallying. It's up close to 2% as we're speaking. It does have some support in the low 18s, so I'm not surprised to see it bouncing today. Same for GDXJ, which has been weaker than GDX. GDXJ came all the way down to its September low. So, and that's up more than 1%, not quite as much as GDX. Looking at GDXJ, so it's rallying from close to a low of 2600. And looking at the chart, there's resistance, quite a bit of it, once you get above 27. So I'm not expecting any real big rally here in the miners. Maybe we can have a couple days of strength. The weekly and monthly charts, I mean, they're obviously very bearish. So this rally is really not going to change anything, and it's just an oversold bounce because, as I said, GDXJ and GDX, they hit support points. And, I love to talk about the advanced decline line, Corey. And for GDX, that thing has just been crap. I mean, that's been plummeting in recent weeks. You have a strong negative divergence there. I mean, that thing is way below its September low, whereas GDX isn't. So that negative divergence is still well in play. It's still suggesting that GDX should come down to, at least that September low soon, but probably even go below it. So, yeah, to sum things up, we're getting an oversold bounce here. Might last for a couple days, but the trend is firmly down, and I would not be getting excited about this strength or trying to piggyback on this one-day momentum.
So when it comes to that advanced decline line, and when you compare it to what the underlying stocks are doing, or at least the ETFs, it sounds very familiar to what we were seeing over summer, too. Before that big breakdown, I was hearing from you that advanced decline line was breaking down, but GDX, GDXJ were being held up by what that means, fewer and fewer stocks. And then we saw that pretty severe decline at the tail end of summer. Are you thinking that we might be setting up for something similar again?
Yes, exactly so, because what's been happening is GDX has been holding up better than GDXJ. I mean, of course, it's still been declining, but it's not as much as GDXJ. And so what's going on when you have the advanced decline line plummeting or showing quite a bit more weakness than the underlying market, which in this case is GDX? What that means is that most of the stocks in GDX are going down. However, the ones that aren't are very strong, and they're helping the index. They're kind of mitigating the chance for a much bigger decline. So that's what explains you could say, relative strength in GDX, or lack of relative weakness. That would be a better term. So the fact that a small percent, while most of the indexes, most of the components, the stocks, most of them are going down, according to the advanced decline line, weak in participation is very bad. However, the tiny percentage that aren't going down, those are showing, I don't want to say extreme strength, but they're showing enough strength where it's preventing the index from going down as much as GDXJ, for example. So what happens, Corey, and this is what happened in the summer, what could happen is at some point when those strong stocks roll over and start, they lose their relative strength and they start going down with the rest of the index, that's when you see severe declines in GDX. Now, I don't know if that's going to start in the next couple of days or the next month, the next couple of weeks. I don't know exactly when. I haven't looked at all the components closely enough, but it's just another reason why the advanced decline line is so important and why it tends to be a leading indicator. So that's really concerning to me. Maybe that sharper move down will happen after this little rally that we're getting. But in any case, Corey, given what's going on with the advanced decline line, you can't make a bullish argument for GDX right now. You just can't.
Any comments too, Jordan, on the fact that we're seeing, again, relatively lower volume, but sometimes when we have seen the volume spikes, it's been, again, on the down days?
Yeah, I don't. I obviously look at volume, but I don't pay attention to it that much. Just bringing it up here, the fact that the sell days, you tend to get higher volume. That's just a sign of where the trend is going. Now, if we do get at some point, I still think it's early in this decline, but at some point, if you get a real spike in volume to the downside, and that's combined with other factors such as the advanced decline line starts to strengthen or bottom a little bit, the percentage of the stocks that are below the moving averages gets blown out, where you have 95% down below the 50-day, and you see the miners are they're really oversold, they're close to support points. That's what I would take from the volume being really big. I wouldn't really worry about it on a day-to-day basis, but when the market starts to get more oversold, and some other indicators they're nearing extremes, and so you can start looking for a counter trend rally that can last weeks rather than a couple days. That's when I would pay attention to volume to see if you get a spike. Because I'm looking at the chart right now, and in August we had that temporary low when the market really sold off aggressively in the preceding 3 or 4 days, where GDX came down to 18. I'm looking, and you had a 3-day period where you had a clear spike in volume, and so that coincided with the August low. So that is how I'd look at volume. But on a day-to-day basis, it doesn't really mean a whole lot to me. But we'll see. This low that we made yesterday, if GDX and GDXJ start to lose that low to the downside, whether it comes the next week or two or not, that's when I think you could start to see volume pick up again.
Okay. Jordan, one other comment too. You mentioned silver and how you do pay attention to what's going on in those markets, because silver can actually lead the metals, or at least tell us which direction it's going. When we look at SIL, that is a pretty scary chart. It is continuing to move down and could potentially be testing some of those lows that we didn't see until back in 2015, 2016. It's, again, a scary chart. What do you think about the overall breakdown that we're seeing in SIL as well?
It's definitely concerning, because SIL yesterday and the day before, they made a new low. They went below their September low. And interestingly, I believe it was last Friday, for the third time, SIL bounced at its September low. So it also bounced from there at the end of October. So at the end of last week, looking at SIL, that would have led me to think that this market could bounce for a couple of days, but instead, Monday it broke to a new low aggressively, and then Tuesday confirmed that. It's bouncing today, so maybe again it probably should perhaps rally for another day or two. But the fact that SIL has already penetrated its September low to the downside, and SIL, Corey, this is something that really started to weaken in the spring, where it really started to steadily fall off before GDX and GDXJ. That was a leading indicator. It was negative at the time, and so maybe the fact in the last couple of days that it made a new low again before GDXJ, well before GDX, that's not a good sign for the sector. And look, this is what you see in sharp sell-offs in the sector. You see silver stocks leading to the downside. You see silver leading gold to the downside, which silver has done in recent days. But we'll see if this rebound that we're seeing can if the market holds that into the weekend in silver and silver stocks. Maybe they can rally for, I don't know, a week or two, but I'd be skeptical of that. I mean, this is counter trend strength that we're seeing, and again, the fact that silver stocks made a new low already before the gold stocks, silver made a new low before gold. It's just not a good sign. I mean, that's what you see in sharp downtrends. And look, we need the sector to get a lot more oversold, and we need to see silver and silver stocks starting to either strengthen or go down less. And when that happens, that's another indication that we get to, a point where we could get a better counter trend rally. And the last point is, as far as a counter trend rally, if we get really oversold in the weeks ahead, you put tax loss selling on top of that, combined with an extreme oversold condition, around Christmas or the New Year, I think that could set up for a decent counter trend bounce in the first quarter of next year.
Okay, so overall, if we do see this weakness that a lot of these charts are telling us, then that could very well lead to a nice bounce to start next year. What happens if maybe we just move sideways for the next little while? I know that the charts aren't necessarily telling us this, but if that plays out, then what does that mean for the start of the year?
That's a really good question. I mean, if yesterday was some kind of sustained low in the sector and it bases for a little bit, then there would probably be some chance that the December rate hike is the last rate hike for the Fed. I put a low probability on that, but that's really the bullish scenario, is that the miners and metals start basing here. They don't go lower. And then December is the last rate hike for a while, perhaps. And then you can see more coming off that base, better strength in Q1.
Okay. Hey, Jordan, always interesting to catch up on what your technicals are telling you about the sector. They have been spot on for a long time now when we've been talking about, unfortunately, downward pressure for the metals. It seems like it might continue, but we might be going through at least a little bit of recovery bounce. But right now, you know what? The overall sector is still in a tough position and could get even worse heading into year end. Jordan, as always, thanks for your time today.